I think we're going to see one of the greatest asset bubbles in human history. I think the fiscal situation is a problem. And, I used to do media appearances and say that, and now I get the benefit of the Fed also thinks the fiscal situation is a problem. Our new administration thinks it's a problem. Every economist on CNBC thinks it's a problem. It's officially alert, danger. This can't last. Jamie Dimon. This is the first time I've agreed with Jamie Dimon on pretty much anything. So I think the problem is we have too much debt. And the way I would say it is that someone has to realize the loss, right? Domestic debt to GDP, close to 130%. Global debt to GDP, well over 300%. And so there's a loss that has to be realized. And the question is, where are we going to realize that loss? Are we going to render all bondholders poor? Probably not. My expectation is further currency debasement. My expectation is further asset inflation. And my expectation is Bitcoin will continue to be the best performer because it's the scarcest and the hardest to make more of. In fact, it's the only thing you can't make any more of it. So the 250 to a million range it's a crazy buffer for me to say out loud. But the reality is, if America comes out and buys 4 million Bitcoin, I think Bitcoin ticks a million easily. If not, and we get interesting fiscal policy from this administration, well, then 250 seems decently reasonable.
Jack Mallers begins with a bold and provocative claim. Bitcoin is on a trajectory to hit $1 million. Far from mere sensationalism, Mallers grounds this assertion in the complex and troubling dynamics of global economics. Highlighting unsustainable debt levels and the ongoing reliance on currency debasement, Mallers paints a picture of a world where traditional financial systems are increasingly under strain. Against this backdrop, Bitcoin emerges as a uniquely robust asset, defined by its scarcity and decentralized structure. Mallers elaborates on the vulnerabilities of fiat currency using a historical example.
My parents' house was purchased in 1962 for $16,000. It's on Zillow. The estimate for that house is $780,000 today. But what Peter said to me, at $35 an ounce, how many ounces of gold was it to purchase the house? And then at $2,700 an ounce of gold today, and it turns out that the house is, it's worth less than the same ounces of gold. So meaning if I had that number of ounces of gold, it would be 1.25 million, but the house is worth 780. And then his point was, that makes sense because it's easier to build these houses now. We're more efficient, blah, blah. In real economic terms, the house has actually gone down in value.
Through this anecdote, Mallers underscores how fiat currencies erode value over time, whereas assets like gold, and now Bitcoin, serve as a hedge against this erosion. Bitcoin, he argues, represents a revolutionary leap in the preservation of wealth. When addressing Bitcoin's volatility, Mallers flips the typical critique into a positive perspective.
Volatility is a good thing. If you're on the first floor and you want to get to the penthouse, the only way to go up is with volatility. Volatility implies life. Volatility implies performance. And so the volatility is a good thing. Without volatility, you can't get any returns. So I would say security and volatility are probably the most misunderstood, where Bitcoin's the most secure thing you could ever own with no counterparty risk. And Bitcoin, I hope it continues to be volatile because that means it's going to continue to be the best performing. It's just math.
Mallers frames Bitcoin's price swings as evidence of a thriving and dynamic market essential for delivering its unparalleled returns. Expanding on Bitcoin's global potential, Mallers presents a compelling vision of its integration into national economic strategies.
If this happens, this will be one of the most important economic announcements in U.S. history. I think it'd be on par with 1971 and Nixon. However, what I think is not being talked about enough is it's positive, Caroline. It's positive.
Because you'd have to go out there and buy in the market, but will that actually happen?
No, my meaning is this. In 1933, the U.S. had a really big economic announcement. What was it? We're taking all your gold. In 1971, the U.S. had a really big economic announcement. What was it? We're divorcing ourselves from the gold standard so we can print money. In 2008, the U.S. had a really big economic announcement. What was it? It was we're bailing out all the big banks that misbehaved. In 2025, if the US has a really big economic announcement, what is it? It's we're pro-technology, we're pro-innovation. What principles and morals and ethical alignment does Bitcoin have? Equal rights, equal opportunity, an open network. These are American ideals, American values. This is an asset that was accessible to the people 15 years ago that the people own. Governments only own 2, 3, 4% of this asset. This asset is held by the people.
This statement highlights Bitcoin's compatibility with values of democracy and innovation, framing it as a transformative solution to fiscal challenges. For those who fear they're late to the party, Mallers offers a blunt rebuttal.
Thinking you're late to Bitcoin is a failure of your ego. I really do, because it's late to who? Mm-hmm. And you realize, oh, you're comparing yourself to Anthony. You're comparing yourself to your friend, to your colleague, to this person you don't know on the internet. And to me, that's a failure of your ego. That's vulnerable insecurities getting the best of your best interests. The reality is, economic decisions are made at the margin. Every single day we wake up and we contribute value to this world. Our alarm goes off and it might be cold, we might be tired, commute might be long, but we get up and we do it anyway. And we make the world a better place through whatever our contributions are. Janitor, podcast host, investor, we contribute to those around us. We got to store that value somewhere for ourselves, for our future, for our family. And you have to make that decision. And every single day, I make that decision, and that decision continues to be Bitcoin, no matter the price.
Mallers challenges skeptics to shift their focus from Bitcoin's price to its intrinsic properties as the hardest money ever created. As Bitcoin's adoption expands, Mallers predicts it will redefine the global financial landscape.
No, I think it's the best expression of fiat debasement. It is the antithesis of fiat currency. It has no central bank. It has no government. Its monetary policy is fixed. Its supply is capped. It's everything that fiat isn't. And so if your problem is fiat debasement, then it's best expressed through Bitcoin.
By highlighting Bitcoin's fixed supply and decentralized nature, Mallers underscores its unparalleled value in a world awash with fiat currency challenges. Finally, Mallers ties Bitcoin's rise to broader economic realities.
And so when I look at global debt to GDP at something well over 300%, that means that they've borrowed a lot of time and energy from our future with no growth to pay it back. And that's a huge problem, and that loss has to be realized. And I'm not a macroeconomist. I don't have a college degree. That's as simple as I think about it. I think it's helpful to think about money in the form of time and energy, because then it becomes real. People are always like, well, why don't you carry the debt forward? Why don't you print the money? It's like, well, no. It's not a piece of paper. It's all of our time, energy, our contributions to this world, all of our lives. And so who's going to realize that loss? If we're entering the future with a hole in our balance sheet of time and energy, whose time and energy is going to pay that back? And I think they have two options. Either they can let the banking system fail, the bond market fail, and that's whose time and energy will be making us all whole. So Jamie Dimon's time and energy, all the bondholders' time and energy, all the banking system's time and energy, or they have to debase the currency and take the time and energy of the collective populace.
By framing Bitcoin as a solution to systemic failures, Mallers builds a case for its continued growth and adoption in turbulent economic times. Jack Mallers offers a powerful argument for Bitcoin's trajectory toward $1 million. Through examples, insights, and data, he presents Bitcoin as more than an asset. It's a revolutionary force reshaping how value is stored and understood. He highlights its scarcity, resilience, and potential to outperform traditional assets, explaining why governments and Wall Street are increasingly taking notice. As the world grapples with debt and inflation, Bitcoin's role as a safe haven becomes clearer. What do you think? Can Bitcoin reach $1 million in our lifetime, or are there challenges and variables that could derail this bold prediction? Let us know in the comments below.